Ever wonder why most traders lose money, while a small, elite group seems to have a sixth sense for the market? Is it magic? A secret formula? The truth is far more interesting. It's not just about numbers and charts. It's about understanding the one thing that drives every market decision: human psychology. Today, we're diving deep into behavioral finance, the intuitive power of elite traders, and how you can start to see the market not as a collection of numbers, but as a living, breathing entity. Let's start with a foundational concept: behavioral finance. Traditional financial theory loves to imagine a world of perfectly rational investors making logical decisions. But if you spend even 5 minutes in the real world, you know that's not how people operate. Behavioral finance acknowledges this simple truth: humans are predictably irrational. Our emotions are the puppet masters pulling the strings of the market. Think about it. Fear, greed, overconfidence. Regret. These feelings drive massive market swings. Let's break down a few key biases. First, there's herding. This is the classic fear of missing out, or FOMO. When a stock starts to soar, people jump on the bandwagon, often without doing their own research. They follow the crowd, creating a massive buying frenzy that inflates a bubble, which inevitably pops. On the flip side, when panic sets in, everyone rushes for the exit at once. A skilled trader doesn't just see a price drop. They see the herd running. Then there's loss aversion. Psychologically, the pain of losing $100 is far more intense than the pleasure of gaining $100. This simple fact explains so much about market behavior, especially panic selling. Traders will sell a perfectly good asset at a loss just to stop the emotional bleeding, even when logic suggests they should hold on. They're not reacting to the asset's value. They're reacting to the pain of seeing red in their portfolio. Another big one is anchoring. This is when a trader gets fixated on an arbitrary number, like the price they bought an asset at, or its all-time high. They'll say, "I'll sell it when it gets back to what I paid for it," even if the company's fundamentals have completely changed. That old price is an anchor, weighing down their decision-making and preventing them from seeing the market as it is. Asterisk. Right now. Asterisk. And finally, confirmation bias. This is our natural tendency to seek out and favor information that confirms what we already believe, while ignoring anything that challenges it. If you're bullish on a stock, you'll find every positive news article, an expert opinion that agrees with you, and you'll dismiss the negative reports as just noise. This creates a dangerous echo chamber that can blind you to real risks. So, what does this have to do with trading? A skilled trader learns to see these emotional currents. They recognize that the charts and price patterns we see are not just random data points. They are the footprints of collective human emotion, the greed of a bubble, the fear of a crash. This is the collective memory of the market, a historical record of how crowds have reacted in the past. When you understand these biases, you stop looking at the market as a math problem and start seeing it as a psychological puzzle. This leads us directly to the world of the intuitive trader. When you hear elite traders talk about gut feelings or intuition, they're not talking about some mystical power. They're talking about a highly developed form of pattern recognition, sharpened by thousands of hours of experience. It has the same kind of intuition a grandmaster chess player uses to see the board 10 moves ahead, or a seasoned detective uses to spot a lie. This ability often emerges in what athletes and artists call the flow state. When a trader is completely immersed and focused, their brain can enter a state of peak performance, operating on alpha and theta brainwaves. In this state, analysis becomes incredibly fast and clear. Decisions feel almost automatic, not because they're random, but because the trader's brain has internalized years of market data and patterns. They can process vast amounts of information: price action, volume, news flow, and instantly recognize a setup they've seen before. Their subconscious mind connects the dots far faster than their conscious mind could. Think of it this way. Their intuition is a sophisticated internal library of market behavior. When a new situation arises, their brain instantly scans this library for a match. They might see a specific candlestick pattern forming on unusually high volume right after a central bank announcement. Their conscious mind might struggle to piece it all together, but their intuition screams, danger. This looks just like the crash of '08. Or opportunity. This is the start of a major reversal. This isn't just about charts. It's about reading the crowd. An intuitive trader develops a feel for the market's pulse. They can sense the subtle shifts in sentiment, picking up on clues from the news, social media chatter, and the flow of orders. They are like an intelligence agent in a crowded room, scanning for subtle cues and body language that reveal the true intentions of the group. Crucially, a key part of this process is emotional control. You cannot enter a flow state if your own mind is clouded by fear or greed. Elite traders work relentlessly on their own psychology to remain calm under pressure. By minimizing stress, they allow their higher-level judgment and pattern recognition abilities to function at their best, especially during volatile moments when everyone else is panicking. They become the calm eye in the center of the emotional storm. So, how do they put this all into practice? What are the actual techniques they use? It's a blend of science and art. Many elite traders use sentiment analysis. They don't just read the news, they gauge the asterisk mood. Asterisk of the news. They use tools to track social media buzz and forum discussions to get a real-time read on whether the crowd is overly euphoric or excessively fearful. This often leads them to take contrarian moves. The legendary investor Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." This is the essence of contrarian trading. An elite trader sees a market in a state of extreme panic, not as a disaster, but as a potential buying opportunity. When everyone is selling in a frenzy, they start looking for undervalued assets. Conversely, when the public is euphoric and everyone is piling in, that's their signal to become cautious and perhaps take profits. They act opposite to the panic-driven herd. Another powerful technique is scenario simulation before ever placing a trade. A top trader will mentally walk through multiple possible outcomes. What if the news is positive? What if it's negative? What if there's a surprise? Where is my entry? Where is my stop loss? And where is my profit target? In each case, by pre-planning their actions for different scenarios, they remove the need for emotional, in-the-moment. When one of those scenarios plays out, they simply execute their predetermined plan with discipline. And one of the most effective, yet simple, tools is pattern journaling. This means keeping a detailed record of every trade, not just the entry and exit points, but the asterisk. What was I thinking? What was the market sentiment? What was my emotional state? By reviewing this journal, a trader can start to identify their own unconscious behavioral biases. They might realize they have a tendency to sell winners too early out of fear, or hold losers too long out of hope. This self-awareness is the first step toward correcting those costly mistakes. Ultimately, elite trading is a powerful combination of emotional intelligence, deep pattern recognition, and unwavering discipline. It's about building a framework that allows you to act rationally within an inherently emotional and often chaotic environment. So, let's tie this all together. The collective memory of the market is the emotional imprint left by millions of traders, driven by biases like fear and greed. Your intuitive perception is your brain's ability to enter a flow state and recognize the patterns created by that collective memory. And your discipline and methods, like journaling and scenario planning, are the framework that allows you to harness that intuition and act on it without being swept away by the emotional chaos yourself. When you align these three things, reading the market psychology, honing your own pattern recognition, and building a disciplined framework, you transform your approach to trading. You're no longer just following lines on a chart. You are reading the story of human psychology in real time. You're participating in a global conversation of fear, hope, and ambition. And that, my friends, is the real secret of the elite trader. Thanks so much for watching. If this sparked some new ideas for you, be sure to hit that like button and subscribe for more deep dives into the world of trading and finance. I'd love to hear your thoughts in the comments below. See you in the next one.